Welcome, everyone. My name is Kristen Perry with Remax Professionals in the RK Perry Group. And today I am here to work with one of my favorite lenders, Federico Montoya, to help you guys learn all about what it takes to make your first home happen. So, whether you're ready now to move or in the next week, month, or 2026, we want to give you an opportunity to see what it takes to get into your first home.
And for having me, Kristen. Really excited to talk about this. It's one of my favorite, if not my favorite topic is, helping first-time homebuyers. So just really excited about the opportunity to talk about this with you today and to share this information to everybody out there.
Well,
And
thank
I,
you.
I'll say this, sorry, and I'll introduce myself,
Nope.
Federico Montoya with Synergy One Lending. I've been in working in as a loan officer for about 21 years now. So quite a bit of experience, and I've helped many first-time home buyers throughout my career, luckily. So it's truly a blessing when you're able to help somebody get into their first home, and then help them beyond that, in all aspects of their home buying journey throughout their life. So just looking forward to help discussing this with you today. So yeah, thanks for having me.
Thank you. I'm excited.
Yeah,
Well, let's get started.
sure.
And let's just start from the top. If someone's been looking at homes online and thinking about buying, but they're not sure where to start, my first recommendation is that they talk with a lender. So, what is your first recommendation once they talk with you?
Yeah, absolutely. The first recommendation is, yeah, to talk with a lender, but no matter what, get in touch with a professional, whether that be, uh, the real estate agent or the lender, because the real estate agent can put you in touch with the lender first. So one way or the other, talk to a professional first. And then, yeah, if I get a chance to talk to somebody initially as the lender, I'm going to, kind of go through the process with them as far as timing goes. But really, we're looking to get a loan application. The loan application will have a lot of information on it, and we're able to, take that loan application and kind of start the process with that.
Awesome. Many people seem to think that they need to have everything perfect before talking to the lender. Can you kind of talk about that and the fact that they should probably reach out to you even if things aren't perfect just yet?
Of course, yeah. I mean, yeah, you don't need to have everything perfect. The point is to see where you're at, right? Get a picture into what your scenario is, what your situation is. And then from there, we come up with a plan. Whether it's perfect or not, having the plan, right, is the important thing. If you're not ready now, it's not a no, it's a, let's get you there. Let's get you there in the future. It might be a no right now, but it's never a no forever, right? So yeah, we anytime you're just starting to think, it's time to start looking for a home. I'd like to purchase a home. What do I need to do with that? Or what do I need to do to be able to do that? They should reach out, and we come up with that plan.
Okay, awesome.
Yeah.
And when I want them to start talking to a lender early, even when they're months out, what are some of the reasons why those early conversations are so valuable?
Oh yeah. I mean, well, first it could be just credit, right? Maybe you need help with your credit. Even if you have, a decent credit score, could it be higher? Could it help us get, better interest rate? What's your employment situation, right? How long have you been on your job? Have you been earning a specific type of income? Maybe you just became commission. Are you self-employed? How long do you need to be self-employed for that? It's about planning, right? So if you're 6 months out, you say, well, what does my scenario look like, and what do I need to do to get to where I want to be? You might be able to qualify for, a certain price of a home, maybe a $500,000 home right now, but really you want to be in that 700,000 range. Well, what do I need to do to get there, and what does that look like? That's why you start planning right away, even if you are 6 months out. And the best thing is that with us, we could do a soft credit pull and get a good glimpse at your credit without having to do a hard inquiry and affect your credit. We're one of the lenders that can do that. And it's really helpful because, it allows you to start to plan once you can see that mortgage credit report as opposed to maybe even a Credit Karma score or a consumer credit score. That mortgage score is a bit different, and it'll help you get things planned out.
Awesome. Thank
Yeah.
you.
Yeah.
So the next step, once they start talking to you, is to get pre-qualified, or some people call it pre-qualified, some people call it pre-approved.
Mhm.
Could you walk through what that looks like and what you need from people when they want to get started on that process?
Sure. Yeah. I mean, the first step is absolutely to do a loan application and discuss any, special situations that you might have with your lender. Getting that application, the application asks for, personal information, where have you resided in the last 2 years? Do you have a 2-year work history? If not, were you getting some schooling, or what was your situation the last 2 years? And then it looks at your assets too. What do you have saved up potentially for down payment, or what we call um, payment reserves, right? That's what the application does. It lays that all out. And then we do a soft credit pull based on that. We get a good chance to look at your credit history. What does your credit history look like? What do your monthly debt payments look like? Meaning minimum monthly payments on credit, whether that be, credit cards, car loans, student loans, lines of credit, anything like that. That application gives us that glimpse. And really, when you're looking at pre-qualification, pre-approval, as a somebody who is a borrower, you want to provide as much information up front to the lender so that there's no questions later on, right? Maybe you have a child support payment, or you get child support income, or you get income from, other sources that might not be employment sources. You want to give all of that information so that that could all be documented, and you're up front in a good place to get out looking for a home, so that, because during the loan process all of these things come up, and if you haven't addressed them up front, that's a problem. And that's why that's a full pre-approval. The more documentation you provide, the more solid your pre-approval is.
Awesome. And how long does that usually take from um, actually filling out the application to when you've given them a pre-approval?
I mean, it could take a matter of hours, really. If it's a situation where I'm expecting an application to come in, that application comes in, the application process itself online or over the phone, either one, takes, 20 to 30 minutes at the most. Uh, and then from there, if I'm expecting that application to come in, I'm able to look at it, review it, pull credit, maybe get some documentation. We have a lot of ways to do a lot of automated verification of employment, income, assets. It could be pretty quick. The
Okay.
longest it could take would be, if there's a lot of documentation needed, maybe it might take some back and forth for a day or so to get that documentation. But it could be as quick as, an hour um, to get that pre-approval, as long as there's, open communication between you and your lender.
Awesome.
Yeah.
And I know some of this with regard to all the documentation can sound intimidating for first-time home buyers. So, what are some recommendations you have, or how do you make it low stress as they're working on getting all of that information to you?
Sure. I think it's basically understanding why that documentation is needed, what exactly we're looking for. Hey, do you work overtime? Okay, so we need to average your overtime over a certain period of time, whether that be 1 year or 2 years. So we need to see your pay stubs with your breakdown of your overtime. Are you commission based? How long have you been doing that? It's the understanding of why, as a lender, why you might ask for specific documentation, and hopefully being able to have access to that information through your online payroll provider. Most of the documentation that we ask for as a lender, most people have access to relatively quickly. And so it's not meant to be a high pressure or high stress experience. It's just that open communication and making sure your lender explains to you why it's needed and how you qualify. It's all about transparency and education. And I pride myself on doing a good job of that education and explanation so that as a buyer, you feel fully informed with full transparency as to why you qualify for what you do and how much that potential monthly payment is going to be and where it fits in your budget.
Awesome.
Yeah.
And do you have any common misconceptions people have about this process that you hear um, as they're going through it that you want to debunk?
Yeah, I think so. I think people are concerned like, oh, I might have just got a new job, right? I can't qualify for a year or 2 years or 6 months, whatever it is. But no, I mean, in most cases, even if you recently switched jobs, even if it was 2 weeks ago, right? And you've just started a new job, no, you can still get pre-approved. You can still get qualified to buy a home. Maybe your credit score is a bit lower. That works okay too. Um, you haven't saved up a lot of money for down payment. There's low down payment options and potentially down payment assistance. And you might not even have to be a first-time home buyer for them. Sometimes you do. But no matter what, it's all about just discussing your options with a loan officer, with a lender, so that you're fully informed and you can make the decision that works best for you and your budget.
So it sounds like the moral of the story is if you have any interest in buying a home in the near future, they should ask.
Absolutely.
And
Yes. Yeah. It's about asking and then getting educated by
fair.
somebody who's knowledgeable and has been in the business for a while. So,
Awesome.
yeah.
Let's talk about loan options and programs. Once
Yeah.
someone's pre-qualified, the next big question that they often have is what kind of loan fits best? Can you talk about some of the common loan options for first-time home buyers?
Sure. Yeah. We talk about conventional VA, FHA, USDA, and there's down payment assistance that might work with all of those too. But conventional loans, it's conventional loans are typically the most flexible as far as maybe a property itself, um, but they do require uh, to have higher credit scores. Ideally, 720. You can qualify with lower scores, but ideally, it might not be the best option. If you have if you have challenging credit, FHA maybe be better for you if you have below a 700, 720 score, kind of in that range. They both, the FHA and conventional, both have low down payment options. And one of the misconceptions with conventional is, oh, you need to have 20% down. No, I mean, there's conventional options for first-time home buyers with 3% down payment and 5% even if you're not a first-time home buyer. Sometimes conventional has better mortgage insurance, which we could touch on later as far as what mortgage insurance is. But there's definitely it's more credit driven FHA versus conventional. And then you have VA, which is if you're a veteran, is a great option. It's no down payment. You could even put for a down payment assistance program behind it, but use the down payment assistance for your closing costs too. The VA is a great option. It allows for potentially lower credit scores, higher debt to income ratios, um, pretty good interest rates for VA borrowers, no mortgage insurance. So yeah, I think if you qualify for a VA loan and especially if you're a first time home buyer, you're going to want to use that VA benefit. So yeah, it would be you want to start with a VA option if you qualify as a veteran,
Okay.
current active military.
Okay.
Yep.
And then what about down payment assistance or first-time home buyer programs? Are there any that um, are really exciting right now or any that you want to share with us right now?
Sure. Yeah. I mean, there's a lot of options, luckily, here in Colorado. We have quite a few different programs. The most flexible is CHFA, which is Colorado Housing Finance Authority, CHFA. Um, they're the most common because they're the most flexible. They cover all of Colorado, whereas some other first-time homebuyer programs or down payment assistance programs are more restricted based on geographic area. They allow for the highest options as far as maybe debt to income ratio, whereas others might be more restrictive. CHFA allows for more home buying power by going to higher debt to income ratios. They also are typically carry lower interest rates than other potential down payment assistance options. They don't require you to necessarily be a first-time home buyer for all of their programs. So CHFA is a place to start. There are other options though too. CHFA is restrictive on you have to buy a single family residence, whereas there's some other down payment assistance options out there for people that, first time home buyers that might want to buy a duplex, right? And live in one side and rent out the other. Or maybe they have a cosigner, maybe they have somebody that isn't going to live in the house with them, but is going to help them qualify for a home by using their credit or income or a combination of both. CHFA doesn't allow for that, but there are other down payment assistance programs that allow for that. So, the best thing is to look at all those options, and obviously, me as a loan officer would help explain those to you and what the different options are. But we're lucky here in Colorado to have some good options and some local options, and then at Synergy One, we even have some options ourselves that are unlimited income options, whereas most down payment assistance programs have income limits on them. But we have options for you, no matter what your situation is. Definitely when it comes to down payment assistance and not needing to necessarily be a first-time home buyer.
Awesome. Thank
Yeah,
you.
yeah.
So once we get pre-qualified and we've talked or pre-approved and we've talked about the loan options and programs, what are your big things that you recommend we not do after getting pre-qualified that could really derail the mortgage process?
Well, you definitely don't want to take on any more debt or apply for more debt, right? Once you're pre-approved, we're gonna get notified as a lender if you apply for additional credit card, or even if you're out shopping for the holidays and you say, oh, I could get a zero interest for the first 6 months or whatever they offer you wherever you're shopping. Once you apply for that, it's going to give us an alert, and you're going to have to address if you took out more debt, and then we have to include that debt. Buying a car, things like that. Any new debt you don't want to do. You
Awesome.
also don't want you know, to kind of take on any other necessary purchases or drain any of your assets without talk. Like, let's say you have, $10,000 in the bank. You don't necessarily want to take $5,000 of that and go buy something, whatever that might be, because that can affect your qualification.
Okay.
Any large financial changes, you're going to want to address with your lender, or switching jobs even, right? Even if you're like, oh, well, this other job is going to pay me more. Oh, but it might be commission based, but I'm not commission based right now. That can completely terminate your qualification. If you've never worked a commission job and you go get one, it could hurt you, and it could disqualify you from getting the mortgage. So anything like that, you want to talk to me about, or whoever your lender is. Obviously, you don't want to make a big decision like that without finding out how it's going to affect your mortgage qualification.
That makes sense.
Yep.
Eh, What are some of the smartest things people can do in the months before they buy? Or, in other words, if someone's listening right now and wants to buy next year, what should they do right now besides talking to you and
Mhm.
myself about buying their house?
I think keeping your credit card balances low, revolving credit lines and credit cards, keeping those balances low. That's key. And understanding one like oh, I pay mine off every month. Let's say you charge, maybe you charge everything to your credit card to get points or whatever, and you pay them off, when you get the bill. Well, if that bill has a higher balance on it, it can affect your score. The key to understanding credit is that the credit reports to the credit bureaus when the bill is generated. So even if you have a high balance at that time and then pay it off later, well, that high balance is getting reported to the credit bureaus. It's best to pay down your high balance before the bill is generated. So what I mean by that is, let's say you go and charge, $3,000 on your credit card. Uh, it's best to pay off that $3,000 within, a couple of weeks before that bill might be generated. The key is knowing when your bill is generated. And I could, talk more specifically to any individual's particular dates with that and what that means and help walk you through that. But it is a key to current the way that credit currently works and the way it scores is it's just a picture at a point in time. It's not necessarily an ongoing process and in the way that credit works. So that's the key that I
Awesome.
yeah.
Well, next, let's talk about the timeline and next steps. So, um, typically once we go under contract on a house, I
Mhm.
always tell my buyers that it's about 30 days. Um, I'm going off script a little to say, what do you usually ask for from the clients from once we go under contract until closing, um, with that process and timeline?
Yeah, it kind of depends on their situation, but if they've if they have been pre-approved for a while and have been out looking for a home, let's say, 3 to 4 weeks before they get under contract, we might need updated pay stubs and potentially updated bank statements. When I say that, we do have a way to link that digitally too, so we might just need to update it. Luckily, we have ways to link through your payroll or link through your bank um, uh, digitally rather than you having to provide statements. But no matter what, we might need to get an update on your income and asset documentation. Um, Credit reports are usually good for 120 days. So if it's been a long process, we might need to pull new credit. But that's kind of a more uncommon instance. But that's typically all we need as far as anything updated. Um, once you go under contract, hopefully most of the things that we need you've already provided, and then really it's just about reviewing the loan documentation specific to the house with the specific numbers for your particular transaction. Those all get updated, right? We know what the property taxes are going to be on the home. We know the date that you're going to close. Um, you shop for homeowners insurance. That's really a big deal. You want to get that taken care of as quickly as you can up front. And then we get those numbers dialed in so that you have a really good idea of what your monthly payment's going to be down to the penny. And we talk about locking your rate in. Um, those things are what happen as soon as you go under contract, typically within the first week.
I always tell my clients the first week when we go under contract is the most overwhelming because you're
Yes.
talking to them a lot and I'm talking to them a lot. But then I'm like, I promise after the first week, it'll be easier.
Yep, that's right. Yeah, I mean, they're like, yeah, you're talking to them. You're making sure there's deadlines. You're getting inspections scheduled. We're talking to them about appraisal, shopping for homeowners insurance. If they're doing down payment assistance program, or even one that you might have low down payment, they might have to take a first time homebuyer class, right?
Mhm.
Then and that could be, that might be something that they're getting set up right, as soon as they get under contract. I should actually speak to that. We haven't spoke to that yet. But a lot of these programs do require a first time homebuyer class that you could be taking while you're out looking for a house. The thing that most people that I work with, they're like, oh, they kind of put it off until they get under contract. So like Kristen just mentioned, it's it's a it's a busy first week for sure. And if you're throwing in having to take a first time homebuyer class, either in person or online, that could be a 4 to 6 hour class. It could be a Saturday class, so it's like a 6 hour class too. Online, it's a 6 hour class. So if you've done that while you're already out looking for a house, you're gonna be breathing a bigger sigh of relief compared to somebody who's having to do that as soon as they get under contract. So as soon as I get somebody pre-approved, we always send them the information on the first time homebuyer course and encourage them to do it. Most people don't, and that could add to some of the stress as to when you get under contract. So I always recommend it while they're out looking. So
Another reason to start getting pre-qualified as soon as you think that you're going to want to start buying a house.
that's right. Because you could take that first time homebuyer class, and in most cases, it's good for 6 months.
Okay.
In some cases for a year. So yeah, it's you want to do you want to get that knocked out and do that at your own pace. So it's less stressful and more beneficial from what it's supposed to be, which is to help you understand what it means to be a first time home buyer and understand what it means to own a home. So
Awesome.
yeah.
If someone were to know that they want to buy in this spring and get pre-qualified with us now,
Mhm.
is there any big check-ins or updates that you would recommend they do? Obviously, if they want to buy a big purchase, they should check in with you. And if they're looking at a new job, but do you have any other recommendations for how often they should check in with you if they're just living life, waiting until they're ready to start looking?
Yeah, I would say, a monthly check-in is pretty good.
Okay.
You know, where are things at? Where are interest rates at? Have any new programs come up? Because new programs come up all the time. Um, we recently have added a couple programs for first-time home buyers with low down payment and lower interest rates. So, new programs come up all the time. So it's definitely a good idea to do a monthly check-in, you know, hey, where's your credit, where any job changes, but more of, has my purchase power come up potentially? Have interest rates drop? Um, you know, any changes like that. A monthly check-in is a good idea.
Awesome.
Yeah.
Do you have a story of a buyer who started early and it really paid off for them or really worked out well for them that they started looking early or started talking to you early?
Yes, absolutely. I had somebody earlier this year who ended up buying in April. We had started a full year before, and she was in a situation. She was a single mom. Her credit wasn't in the best position. She wanted to qualify. She had good income. She wanted to qualify, kind of a home in that 600,000 range. And she definitely wasn't at that point yet because of her credit and her debt. And she really worked on, paying down her debt, getting her credit score up, and really maximizing her qualification. And really, because of her being able to get a lower interest rate, because of having a better credit score, lower mortgage insurance, because of having a better credit score, even having a better credit score helped her with her homeowner's insurance that she got, through Allstate. Um, she was able to get lower homeowners insurance. So her whole affordability was improved just by waiting that year, by working on her credit. She was in a position where her payment was a lot lower than what it would have been otherwise, and she got into the home that she wanted. And she was just, I mean, it was just really a proud moment for her, knowing that what she accomplished, based on just where she started, not having the best credit, but really improving her score over, a 740 credit score where it started in the 600s. And it didn't, she was just diligent about it. And we checked in periodically, just to see where rates were at, see what she had paid down on her credit. We're able to give people, through a credit simulator, even when we do a soft credit pull, we're able to give people a plan. Here's where you need to be. Here's where your score can improve by this many points based on the credit simulator, which is usually, pretty accurate. Here's what you need to do. You need to close this account, pay down this account, whatever it is. Some people you might even have to open an account, right? Um, it just depends. So we're able to really get specific with people's credit scenarios and uh, help them improve their credit profile and give them a realistic time frame to do that. And with this buyer, she was just in a really good position, and she really got a house that she wanted in the area she wanted. Whereas when we started, it didn't look like she would be able to do that without really, sticking to the plan.
That's awesome.
Yeah,
I love
yeah,
stories like that.
yeah. It was a proud moment for her, and yeah, she was, she was very thankful. But we just give the plan. The people have to do the hard work, so it's a proud moment for them. So yeah, yeah,
Awesome.
yeah, yeah.
So, what would you recommend if someone's waiting to next year to reach out? We've given them a lot of reasons that they should start reaching out now, but what would you say to somebody who is wanting to wait till after the holidays to start even thinking about it?
Well, I would say, getting started now, if you have time, it's a pretty simple process, right? It doesn't take much of your time. Even if it might be a, challenging situation, it might just be a little bit of communication back and forth on a couple quick phone calls or even by email or text. So it doesn't take up a lot of people's time. If you have, you know, 20 minutes to spare to do the application and maybe another 15 minutes to get me the documentation, so you're talking 30 to 45 minutes to really get pre-approved. That's not much time, and so I would recommend doing that as quickly as possible. If you want to wait until after the holidays, that's fine too. um, you know Getting started by that first week in January, that second week in January, it could be quick. But even if you have time during the holidays, a lot of people have downtime, right? They might take a day off, and especially between Christmas and New Year's, after the hustle and bustle of Christmas is done, you have that week between Christmas and New Year's where you might not, you might have some downtime. Work might be a little bit slower, or you've taken a few days off. You're just kind of hanging out. Get started then. I'll have more time during the time to answer your question. Starting at the beginning of January, everyone wants to get going. You start looking at filing your tax returns. What is your, potential tax refund going to look like? Will that help you potentially with the down payment? Things like that. You know, it's there's just more people to work with, and it might take me longer to get back to you. There's going to be more buyers by the time March comes around. It's every year without fail. Once people start filing their tax returns, they get their refund. They have, some money to spend, and they want to look at buying a house. Even with down payment assistance, you don't need much money into a transaction to buy a home. You could come to the table with as little as $0 or $1,000 is what Chaffer requires. But think about people, they come out of the woodwork, you're going to be up against more competition when you start looking at houses. You know, if you are looking at March or April or May, which is fine, but it doesn't hurt to get process started now. And maybe you'll be pleasantly surprised that you can qualify right now and you can start looking for a home in January. And you could get into a home in January, February before, more buyers are in the marketplace, and it's more challenging to get under contract on the home. If you could do it now and it makes sense, the payment makes sense, you might be pleasantly surprised to get started now. So yeah, if you're thinking about it during the holidays and you have some downtime, reach out and we'll be ready for you. We don't, I don't take a lot of time off around Christmas. I might not answer my phone on Christmas Day, but I pretty much answer my phone or Christmas Eve, but I mean pretty much answer my phone the rest of the time. So, we're here ready to help you, and I mean whenever you're ready to get started, we'll be ready to help
Thank you.
you. Yeah.
I always tell people that I like them to get pre-qualified and talk with a lender because I think so often they start looking on Zillow and seeing what the suggested payments are and are always very surprised that the payments on Zillow don't necessarily match what they say. when they talk to a lender, which is why I want them to talk to a lender before they fall in love with a house that's well over their budget.
Yes, yeah. I mean, Zillow gives you estimated payments based on 20% down, sometimes 25% down. They're definitely not first-time home buyer down payment assistance programs. Sometimes Zillow, Redfin, they underestimate homeowners insurance in the area. Obviously, with 20% down, there's no mortgage insurance. If you put down less than 20% down on a loan, you're going to have what's called mortgage insurance, which is, additional monthly cost. So yeah, what your potential monthly payment you see on Zillow is not going to be um, matched up to what your true monthly payment is going to be most of the time. So it's always best just to talk to a lender and get a realistic monthly payment, and help you set a realistic budget for the price range you want to be in. You either, you start with a monthly payment and you kind of match the house to there. And if you want to buy a more expensive house, then you have a more realistic view as to what that payment looks like and what you need to do from a personal standpoint to budget for that. It's so important. Um, it's a huge purchase. You have to have somebody in your corner educating you. That's what we take pride in, right? So we want to help you get there, but we don't want to have it be harmful to you from a financial standpoint in the process. And yeah, like you said, Kristen, you want to have them talk to me first. You want to have them have something realistic as far as when they're looking for a house. What realistically should they be looking at? What neighborhoods might have more affordability, might match what they are looking for as far as schools go, right? And so all of those things come into play, but getting the numbers set first, it really answers, the majority of the questions. And then from there, it's just finding the right house, the right area.
I'd agree.
Yeah, it's
Do you have
huge.
any other? Oh, go ahead.
I said it's huge. Yeah, it's
Yeah.
huge. Yeah.
Do you have any other big recommendations or anything to share with everybody before we start wrapping up?
No, I think the biggest things are, getting the numbers figured out, and being transparent with everything, right? With your lender. I have people that say, "Oh, I have this debt, maybe pay child support or you have alimony." Just be fully transparent with any debt that you have with your lender and let the lender decide if they have to take it into account in your qualification and what exactly it is and how it affects you. That's the biggest thing. You don't want any surprises. And then taking that first time homebuyer course while you're out looking, right? That's your lender, me as a lender, I do as much as I can to educate people, but that course does a lot of education too. And it allows you to look at things from a different perspective. And then, of course, talking to Kristen. Once you have your numbers in place, Kristen's going to get you excited to, what do you qualify for? What houses are there? What does she see coming on the market? Where is the market going in the neighborhood you're interested in? Those pieces, they all work together. And then even if you buy in 6 months or a year, I mean, I've worked with people that they it's a 3 year process. It doesn't matter. Like I said, it's not a no. It's just a not right now, right? We'll get you there, and we'll help get you there. If you put in the work, we'll always be there to support you and get you into the home that you want. That's what we're looking for. So,
Awesome.
yeah,
Thank you so much. I think
of
this has
course.
been really helpful, and I think a lot of first-time home buyers are going to feel a lot more confident after learning a little bit more about the process.
Yep,
So for anybody who's watching, if you're thinking about buying your first home, whether it's now or 6 months down the road, reach out to both of us. Do you want to share your contact information and we'll also include it in the notes?
yep. Yeah, my phone number is my mobile number is 303-667-9235. You could call or text me there. My email address is fmontoya@s1l.com for Synergy One Lending. But Probably best is to call or text 303-667-9235. And how about you, Kristen?
And mine is 303-587-2005. And you can call or text me anytime to get started with looking for a home.
Yep. Yep, we're ready to help you here.
Thank you, everybody. And thank you for the time that you took to talk with me.
Yep, thank you. Thanks for having me.
You're welcome.